Hi, I'm Dave Britton with Lobo Business Sales LLC. In this podcast, we're going to talk about 7 deadly mistakes to avoid when selling. Just a simple step-by-step guide to get you top dollar. Let's go ahead and jump right into it. You want a big fat check too, right? I'm Dave. I've sold several businesses over the past 15 years. So needless to say, I've learned enough to know the fastest way to get a business sold for top dollar. But enough about me. The goal of this guide is simple: to guide you on the must-have items you'll need in order to do 2 things correctly, which are 1, sell your business quickly, 2, sell your business for top dollar. If this sounds like something you might be interested in, please continue listening. I will warn you up front that this is straight talk. No holdback here. There's going to be no warm and fuzzies in this podcast. We'll do it as an outline. 1, 2, 3, 4, 5, 6, 7. Feel free to jump around. And if you're interested in a transcript, just shoot me an email with your contact information and I'll mail you one out. Mistake number 1 is thinking you can sell your business by telling somebody what your business makes versus being able to prove your earnings with facts. Here are a few foundation points you'll need to know. They are the following. 1, businesses are normally going to sell on a multiple of past earnings. The formula is earnings times a current market multiple equals the selling price. The multiple can vary in range depending greatly on several factors. When you are able to prove your earning claims and financials with supporting documents such as a profit and loss statement, also known as an income statement, tax returns, point of sale receipts, bank statement, invoices, expenses, balance sheets, etc., you are positioning your business sale for the higher end of a multiple range. When you are unable to show your earnings with supporting documents and only rely on verbal statements or the old spiral notebook, you are shooting yourself in the foot before you even get started. Don't do this. This is how to quote unquote wow a potential buyer and make them want to pay you more. Prepackage a full overview which clearly shows what your business earns. Also, what's transferring to the buyer. You can do this by having the following items for your financial overview of the business, which include common items: past 3 years of tax returns, income statements, current balance sheet, past 12 months of bank statements, sales reports, also known as gross sales reports, point of sales, list of monthly expenditures, list of any non-reoccurring items or owner add-back benefits in the financial statements listed above. If you take the time to accomplish the above 8 items, you are putting yourself in a position to demand the higher end of a multiple because you are crystal clear in your earnings claims. If you can't do this right away, then wait to sell your business until you have this done. Mistake number 2, thinking you will be able to sell your business to an all-cash buyer. Facts are good to know here. And the fact you need to know is that less than 20% of businesses are sold for all cash. Of these all cash sales, they are almost always done at a discount to value based on common theory of an all cash quick close price. On the other hand, just over 80% of the businesses that sell are sold with some sort of financing. Of these business sales which are financed, almost all receive a higher sales price, and in cases of seller-held financing, a huge amount of interest is also earned by the seller. So the question you need to ask yourself is simple. Do you want to be in the 80% of businesses that sell and make more money? This is how you get financing available for the sale of your business. Although there are several sources and methods, I want to keep this simple and to the point and thus cover the 2 most common methods. 1, get a bank to finance the business purchase. This is done by requesting a lender to pre-approve a loan for a buyer to buy your business. The most common is a small business administration loan, also known as a SBA 7A loan. There is a list of prerequisites that you can get from your bank you're working with, and this will normally include the items mentioned in mistake number 1. 2, hold the financing yourself as a seller. This is easier than going to the bank. However, will present you as the holder of the loan a risk of default. This is not right for everyone. But if you're comfortable with the business ability to generate enough cash flow to cover the monthly payments of the debt, and you're comfortable with the collateral in case of default, then this might be a viable option for you. A huge benefit of offering what is known as seller-held financing is you are effectively putting your stamp of approval on the business as it's your money at risk. Having your business with financing in place before you offer for sale will normally aid in the selling prices quicker and garner a higher multiple for your sale. Mistake number 3 is thinking you know the value of your business when you really don't. Forget telling anyone, especially a potential buyer, what you think your business is worth. The fact is, they don't care. Period. Let me make this clear right now, 100% clear, so it sinks in. It does not matter what you think the business is worth, as it has zero factor on what it will actually sell for. A buyer is going to offer you what they think is a reasonable multiple of the earnings that can be proven. That's it. Nothing more, nothing less. In some rare, and by the way, very rare instances, you may have a strategic acquisition that captures some blue sky in an M&A transfer that is above and beyond the goodwill of the company. However, this is almost always never happens in traditional Main Street business sales. A buyer may offer towards the higher end of a multiple earnings when some or someone other than you is giving this seller a valuable clue of the business. Here's what you need to do to get your business that encourages a buyer to pay you more money for it. The number one way to let a buyer what a business is worth is to hand them a business appraisal. This simple step takes your opinion out of the equation and places it in the expert who prepared the report. It is very difficult for any buyer to justify a price lower than what is supported by a multiple of facts, figures, and numbers that are perfectly outlined and detailed in a professional business appraisal. Doing this shows you are serious about selling your business, and more importantly, will only accept serious offers. No low-ball offers are welcomed when you have this done. Business appraisal will cost you a fee up front for most services. Depending on the scope of work involved, you should expect somewhere between $3,000 to $5,000 for Main Street business values. Those are usually about $2 million in value and under, and upwards of $50,000 or more in more complex middle market business transactions in the M&A world. Mistake number 4. Telling the whole world and letting everyone know your business is for sale. This is a big no-no. Selling a business is almost the polar opposite of selling a house. When you sell a house, you want everyone to know that it's for sale. You put a sign on the front lawn, hold open houses, get the word of mouth going, so on, so on, so on. The more, the merrier. When you sell a business, you only want those who may actually buy your business to even know it's for sale. That's it. Whatever you do, don't go blabbing to everyone that your business is for sale, or you might just find you have no business left to sell at all. Why is a business such a big secret? And how can you sell it if you can't tell everyone it's for sale? In one simple word, confidentiality. Everything needs to be as quiet as possible when selling a business. You don't want your employees to know your business is for sale, as they might get nervous about their job continuing and start jumping ship and leave you with no workers. You don't want your vendors to know, because they might choose to end your contracts or supply chain early. You definitely don't want your customers to know, as they must always see new ownership as nothing more than higher prices in the near future. Most of the time, you don't want your competitors to know because they might just look to jeopardize your sale in a self-interest to capture your market share. In summary, keep it quiet. Very quiet. The best way to sell your business and maintain confidentiality is to use a business broker, hands down. A business broker has the tools to maintain confidentiality and will normally use a non-disclosure agreement, which is a legally binding agreement that protects your interest as the seller. There are several other benefits in having a business broker handle the sale of your business, but one of the biggest is simply confidentiality. Mistake number 5 is not being able to quickly tell a buyer what your business is and why they should buy it from you, and for top dollar. There's a famous technique taught in business school, which is known as the elevator pitch. The elevator pitch is a quick, to-the-point outline of what a business is, why someone should buy it or invest in it, so on. The term of the elevator came as an illustration that the pitch, quote unquote, should not be long-winded and should only take the amount of time of an elevator ride to complete. The simple point of the pitch is to say what you need to have ready also. When selling your business, your pitch is commonly known as a one-page teaser sheet. This is what you want to say in your one-page teaser sheet or less to capture a buyer's attention. A buyer wants to know what your business makes and what is most likely going to make for them in the future. You will want to have a quick summary of the past 3 years of earnings, a brief overview of what the business is and what the business does, and required licenses to operate. Although not necessary right away, it is becoming common to see a brief overview of any lease, rent, to be assumed or negotiated with the purchase of the business. If you look at mistake number 2, you should also have financing in place and thus show an overview of that also. Very brief, just an overview, including monthly debt payments to be made. Keep in mind the goal of the one-page teaser sheet. The goal is simply to introduce a prospective buyer into what the highlights of the business is. That's it. It's not to be a full outline of every detail of the business. That comes later and is only for those who have reviewed the one-page teaser sheet and are looking to continue on the road to buying your business. Mistake number 6. Not having a full detailed report of your business ready up front for a buyer who is seriously looking at buying your business. Up until now, everything we've discussed is being geared towards the general inquiries for information on the sale of your business. The delivery of a full detailed report is when you have narrowed down interested prospects to potential buyers. The full detailed report is commonly referred to as a confidential business review, or CBR for short. In your CBR, you'll normally see at minimum the following items: detailed earnings and the supporting documents. This includes tax returns, income statements, bank statements, point of sales receipts, etc. A full outline of all ownership duties, an overview of the business and its customers, any lease or property information, a list of the assets being transferred, any non-compete clauses to be offered, transition and training to be provided, list of accounts if applicable, list of suppliers if applicable, any financing being offered, comparable sales statistics, potential return on investment purchase, contact information of the business broker and professionals conducting the sale. A well-prepared CBR is one of the most time-consuming items that you will do in getting your business ready for market. If you're not experienced in this preparation, you should consider outsourcing this to a professional. Most business brokers have the tools and knowledge to complete this task, which should help you not only sell the business, but also secure top dollar when doing it. Finally, mistake number 7. Not having a purchase agreement on hand and ready for a buyer to make a written offer. Unless you like to have a whole bunch of tire kickers giving you verbal offers they have no intention of actually acting on, your best bet is to get it in writing. When you have a buyer who has reviewed your business thoroughly, thanks to your faithfully following and avoiding the mistakes that we talked about, the very last thing you want to do is have your buyer wait to make a formal offer. You will be surprised how many deals are lost between the decision to buy a business and the hunting down or waiting on the drafting of the purchase agreement. Ouch! Here's how you make your business sale real. Get it in writing. Get it in writing. Get it in writing. Get it? To be more precise, take time to have a purchase agreement ready before you actually get an offer to purchase your business. You can actually include this in your CBR, as mentioned in mistake number 6 above. This outlines a buyer or allows a buyer to become familiar and comfortable with what the purchase agreement you are going to be requesting. This also allows for a quick reference to any areas of negotiation, example, non-compete clauses, training provided, price, terms, etc. If you don't have a purchase agreement at hand, you can request one from your business broker if being represented by one. Most business attorneys will also have this available. However, customization to each specific engagement will occur. When you are able to have this available to a buyer up front, the buyer can quickly present you with a signed offer in writing. When accompanied with a deposit, this shows you a serious offer from a serious buyer who has been presented with all the prepared business facts for sale. And guess what that means? You have now realized 7 deadly mistakes to avoid when selling your business and are on your way to selling your business for top dollar. Here's what to do now. Use the link below and book a time. Let's have a casual chat about selling your business. We can discuss various options, whether now is the right time to go to market or maybe preparing it for a future sale. All my calls are confidential, and of course, initial consultations are complimentary. I thank you for taking time listening to this podcast. This is Dave Britton with Lobo Business Sales, LLC, wishing all your entrepreneur dreams shine bright. Have a great day.